Today, we're going to cover the 10 most common infinite banking mistakes that I see. I'm Jason Sipple. I'm back with my partner in crime here, Gabe Ratana. And we're here to simplify this powerful strategy so you can take control of your financial future. We're going to clear up the myths, answer key questions, and show you how to apply these concepts to your own life. Whether you're just starting out or you're looking for clarity, this session is designed to empower you with practical steps towards financial freedom. So grab your notebook, your pen and paper, and let's get started. So this is the big one, Gabe. We're going to start off with the biggest one first. This is the one out of the 3,000 plus conversations I've had that I talk to a lot of investors, because we all understand, or we've all been groomed to understand, that to make more money, our money has to go out and go to work for us. We want to make money and we want to have investments so we can set up our whole life to that ultimate freedom that we're all looking for. And a lot of investors call me, Gabe, and they say, hey, I want to start IBC as a way of diversifying my portfolio. This is an excellent statement, but it's suboptimal. I'm just going to call it wrong thinking. We got to rethink that thinking to get that thought in line with thinking to be a banker. IBC is not just an investment, it's a method for managing cash flow. It is bringing back the most powerful business in the world to the you and me level, Gabe, to the you and me level. And I see you nodding your head. You have anything that you want to add about it not being, I can tell 25 stories right here, but with it not being an investment, what are some of the things that you've seen in your conversations around this topic?
Investment involves risk. And what's amazing about the way these policies are designed, they're guaranteed, and that's only part of the process. And to compare a guaranteed piece of the system, the whole life policy, to a different investment, it's like comparing apples to oranges. So it's not really a fair comparison. This is more of we also like to refer to it as the and asset. You do this in addition to your investment,
Yeah,
but learning.
our buddy Caleb Gilliam wrote that book, The And Ask. You guys should check it out. This is a blue ocean, folks, what we're teaching you with banking, like Gabe said. So the And Ask, that's how my mentor actually taught it to me, Gabe. He would tell me, he said, look, Jason, when you put your money in a policy, it has a lid on it. This is full of water right now. Nothing's coming out of this. Not much. So nothing's coming out of this. It has a lid on it. It's guaranteed. When you put your money in an investment, Gabe, what can happen?
I mean, it can go up, but it can certainly go down. And I've heard Brent say in his presentations, like, the only guarantee is, or what is it? Is guaranteed not to go below zero, right? But how exciting is that? But I even think with one of my properties, we ran into a lawsuit where it was going to end up costing us way more than the property was worth, than even our business was worth, the LLC. And we ended up settling out of it. But if you don't know what you're doing when it comes to investing your money, you could lose it. And if you invest with leverage and margin, you could end up losing way more than you put in, right?
And we talk about this a lot with our real estate investors. I talk to a lot of real estate investors where they're expecting the money to come back at a certain time. And that's another thing. Like, you can have a lot of real estate, but be cash poor because your money's tied up in an asset. It's tied up in something that's not leveraged. So banking, what we're doing, we're teaching you to change that one thing. We're teaching you how to put it in a guaranteed environment where you're saving in this hand. And as the banking bros talk, you're saving in one hand where it's growing guaranteed contractually. It's most likely earning you a dividend because all the companies we used have never missed paying a dividend. So we can't guarantee it, but we can tell you it's pretty good that it's going to happen. Like, we've never not been paid a guarantee on any of our policies, right, Gabe? And then on the other hand, we're spending the same dollar. Where else can you put your money and turn $1 into two? It's growing in this hand guaranteed, and you're using it in this hand to go out and make more money. As one of my buddies said, I got to bend all the way down here in the ground. It's like taking, when you're spending that money from the policy, your cash value, it's like tying a string to your dollar bill. It goes out, and eventually, because you're paying yourself back, you're pulling it back in. Nelson Nash liked to say, hey, how much does this cost me? It ain't costing you nothing. And he said that because his first principle is thinking long term. We're going long on this one, but this is probably the biggest one of every slide we're going to show you. We're starting off with the banger, as you know, where we like to say this is the one where we get into trouble the most because we're used to looking at big ROIs, return on investments. With banking, we're looking to control the money, put it in a guaranteed growth environment, and simultaneously provide a legacy for your family. So this one is thinking long term. And when Nelson said it costs nothing because you get to year 5 or 6, 4, 5 or 6, every dollar you're putting in, you've hit that efficiency point. You have more than a dollar you can spend. You get 10, 11 years into this, 9, 10, 11 years into this, every dollar you put in the policy is available in cash value. So did it really cost you anything? No, it just took some time to get there, which is, I thought more and more. We saw someone who's been doing this for 20 years yesterday with so much passion still talking about this. I was blown away as an executive at one of the big mutual companies that we work with. And it was a breath of fresh air for me. I'm like, that's how I felt when I first learned about this 4 years ago. He's 20 years in, probably a decade older than I am and still that excited about it. And so let's look at number 2. What's the second one? You guys, so we got number 2, underfunding the policy. Tony Robbins has this great saying that people underestimate what they can do in 1 year. They overestimate what they can do in that 1 year, and they underestimate what they can achieve in 5 to 10 years with consistent and persistent work. So when someone sets up their premium deposit, which includes your cash value and the base, and they end up only paying the minimums because they look at it as a cost, it really hinders the cash value. It really stops that growth that they set up to achieve their goal. And so, I left a lot of the writing here. So your paid up additions are what maximizes that early cash value. It acts as, and then your dividends are buying you more paid up additions. It gives you more growth. It gives you more death benefit. It gives you more of everything. If you have to go back to the base for a little while, that's okay. That's why we built flexibility. But I see people setting up their policies at times like, hey, I'm going to put X amount in. This is where I'm comfortable. This is how much I'm saving. And then they consistently underfund it. And then when they look at it, Gabe, they say, hey, I'm taking all these examples from people that I've worked with from what I'm seeing as the most common things. They get 2, 3 years into it and they're like, hey, this is not working the way I thought it was going to work. Well, are you doing the things that you set out to do? Like, what has changed? Are you making the total contribution? Are you putting in the additional PUAs you can? Are you using the dividends to buy more PUAs? Are you acting like a banker, or are you stealing the P's?
And Jason, there's a difference between a small policy and underfunding a policy, right?
Correct.
If you have a small policy, say it's $500 a month, but it's it's set up, say, just a 40-60 split, you're paying the PUA. That's different than you having, say, a $10,000 a year policy or 20,000 a year, and you're only paying the base, right? Because now you don't have the cash value, and it's no longer efficient in those first couple years, so that you can use it to do the banking aspect and take back control, which is pay off your debt and stop giving away your money to other people. Because if it was just put our money in it and let it grow, that's something a little bit different, right? We want them to use the money to eliminate those third-party lenders, to eliminate those people that, suck away your money.
That's it. You want to, when we're setting it up, the number one thing that we're asking you as your mentor is, what is your long-term vision? Like, what is your big goal? And then what is the thing that you're going to finance next in your life? Are you going to take back the control of something you're already financing? Or are you going to go make a new purchase? And we want to tie those together. So for this, like Gabe said, if it's $500 a month, we're talking about just paying that base of $210 in the example he gave, and then not paying anything additional that year. And then the second year, what I'm saying is then people are coming to me and be like, Jason, this doesn't work. Well, we're not doing what we set out to do. I understand things always change. It's a guarantee. It's one of the 2 guarantees in life. we are going to not be here. We're going to graduate some point, and life is going to throw curveballs at us. Guaranteed. Let's go to number 3, Gabe. So this is one where, have you guys heard this? And please pop it in the chat if you have heard this before. When's the best time to plant a tree? When's the best time to plant a tree? Anyone? 20
years
years ago.
ago. Very
There you
good.
go, Linus. And when's the second best time? Today.
Today.
Today. That's it. So a lot of the conversations we have, we'll talk to someone. Hey, like earlier, I talked to someone that was 54. She's a referral from a client. Thank you for sending people you love to me. It's amazing. But she comes and she's like, hey, I want to start this on my 17-year-old because he's got so much life ahead of him. And then after the conversation, after we talked about different ways that that could happen, it was very much like, well, you have a son and daughter. You're definitely not too old at 54. It's better that you get started now because you just have a term that's going to run out. So let's set this up to reach your goals with your financing goals. And then eventually we can build an additional policy for your son, for your daughter, for others. But let's start by protecting the family. Like, let's start from the concept of this is protection first, and it's also your financial banking system. Waiting for something to be perfect, waiting till you have a certain amount of money. Now, waiting for good habits, Gabe, that's different, right? That's what we're teaching people. Like, if you get on the mat every week, we're inviting you guys. Like last night, our lesson, and I love this, our lesson last night was it's fear plus action that equals courage. So maybe you don't understand this fully, but if you've read Nelson's book, if you've read Becoming Your Own Banker, and you believe that privatizing your banking is something you need in your life, then that fear plus that action is going to be how you become the best banker you can be. And so it's not too late. If you're just learning about this, then take the next action of getting that book I just showed, or take the next action of paying yourself first and really starting the process to work towards the goal of having your own privatized bank. Next, we have over-insuring or over-committing. Start where you're comfortable. Pick the pain of discipline over the pain of regret. This should ideally fit with what you're saving or what lazy money you have. You want to work with someone that's knowledgeable on how it's going to be set up. You want to avoid taking on premiums. And this goes back to the second point. This goes back to, you want to avoid taking on premiums that are going to be a strain on your cash flow. You want to be able to build the system and have the long-term vision in mind. Like, if you're going to buy a new car, well, what's the car going to cost? When are you going to buy the car? Let's build that up over time, and let's not say, hey, well, I save $2,000 a month, but I'm going to put in 4, right? Because then you're overbuilding it for something that you might be able to do in the future. And I'm saying this because eventually, like Gabe said earlier, if you start at $500 a month, and you guys answer this question. If you've been on the phone with me, Shane, you know that I've asked you this question. Can you put 15 ounces of water in this 12-ounce glass? Or 16 ounces of water in this 12-ounce glass? Anyone? Shane, Felix, Patricia? Anyone? No, you can't. That's right. See, Shane knew the answer. He's been here with me before. And if you said yes, I can't work with you. That's been 2 people so far out of 3,000 people have actually told me yes, you can. One guy I didn't argue with because he told me he had like 18 guns. And I said, okay, well, I won't argue with him. We'll just let him go. But no, you can't. And the reason I ask that is because you are able to start additional policies, warehouses of your wealth. That was Nelson's third book. We always talk about you have your bank on Main Street, and then eventually your banking system is going to expand to 3rd Street, to 5th Street, to 7th Street. Like right now, there's 4 branch offices of the Sipple banking system. How many Rotana banking systems are there?
We have 2, and then my sons should go in force any day now. I'm waiting for my dad to finally. There was just a problem with like logging in to sign. We had to go back to the underwriting to get his last 4 digits fixed. But yeah, it'll be number 3. And
you didn't give up, right? When they had that little glitch, you didn't say, "Oh man, this is not for me," and stop, did you?
No.
See, he even thinks I'm crazy to ask him that question.
Yeah.
So you guys, Brock, everybody knew the answer. No, you can't. So at some point, you want to build it to where you're at today. And that's where I said start where you're comfortable, maybe a little uncomfortable. It's okay to be a little uncomfortable because when you're growing, you're going to be uncomfortable. That's why that fear plus courage or action equals courage, right? And I always talk about the 2 pains Pain number one being the pain of discipline or the pain of regret. You pick. You pick. And by the way, my energy might be a little bit more fired up today. I don't know why, but I'm ready. Like if anybody wants to go spar or anything, I'm ready today. So let's jump into the next one. So, oh man, this one. I saved this one for like 5 slides in, Gabe, because I'm gonna actually let you
Yeah,
talk about this one for a moment.
sure.
One, this one gets me upset. And I used to be totally agnostic, meaning I didn't care if you wanted to practice IULs or if you wanted to use some kind of UL vehicle. But after having, not lying, over 100 calls with people, Gabe, that have not had this go the way they wanted, I want you to talk about this a little bit before I jump in and wrap this piece up.
I guess my closest experience to it is I have a friend who, a client, I sold him a policy and we used to train jujitsu together. And about 6 months ago, I get a message that he's getting ready to surrender his policy and he wants to turn into IUL. It turns out he joined some kind of, I think, wealth group thing. It's like some kind of multi-level marketing company. And you guys got to just be careful who you take advice and listen to, because not everyone has your best interest in mind. That's what I love about the money multiplier and our BYOB group is, we put the client first. We think long term, and we know over time we treat our clients right. We do things right. We'll get a lot more referrals and help us grow, right? But in a good way. What I've seen with IULs is people get paid really big commissions, and they are taught the selling points. So they highlight all the good things, but unfortunately, like the fundamental thing that matters with an infinite banking policy is that it has to be guaranteed. If you take loans out from a policy and in an IUL, there can be problems if the market doesn't perform, or you might have to bring money out of pocket to make up for different scenarios. And I asked my buddy, because he wanted to like compare apples to apples, like an illustration, and he gave me one, and it was all hypothetical, the illustration. I was like, no, I need guaranteed. And then he kind of like stopped talking to me about it. He asked me to read a book on it. And I actually did a lot of research, and I did all my research enough to understand like it's not part of the system. I would consider that maybe more of an investment, with some kind of
Gabe,
life protection.
I can hear the pain you're sharing about your
It's a
friend.
lot of pain, man. And
Yeah.
it's almost like someone not wanting to train jiu-jitsu with me. Like, and that's something else. He didn't want to train with me. He's training with someone else. And he wanted to. The other thing with him too is he likes to like train hard. He's a younger guy. He likes to like more like fight. Where with my school it's a school. We're like learning a martial art, and he I think would have been way further in his development than where he's now, at this other place. But he likes to just like, like spar hard, and sometimes that's not the best way to get better. And your skills was going to carry you on the mat and in life. IUL, I think they seem to sell it as like this is the one thing that'll, if you just put your money in it, it'll get you your retirement income. You'll get the market upside. You won't get any of the downside, but you're still giving away your money. You're not in control of the money,
Yes,
right? You can't.
that's it right there, Gabe. So that's what I was waiting for you to get to. Like when I talk to people, like everyone here, we've got an amazing group here today. I see a lot of practitioners. Janet just asked, what's an IUL? An IUL is indexed universal life. It's a form of life insurance. And when we're talking about it, Gabe, you said the point, control. One of the main points, control. Who do you guys, everyone here, pop in the chat, who do you want to be in control of your money? You or somebody else? Linda says, oh, look at all the me's. Man, what a selfish group. You want to be in control of your money? No, I'm just teasing. Yes, we
Who
want
do
to
you
be
want
in
to be at risk, right?
yeah, we want
With
to be in control of
IUL,
our
you're
money.
at risk versus, with the whole life policy. Once it's a unilateral contract, this company, the life insurance company is on the hook. They have to pay your death benefit as long as you make your premiums.
They
There's a
have to
lot
pay
of
you the guaranteed, they have to pay you the guaranteed amount that they
Mhm.
guarantee contractually, right? Depending on the company. So with an IUL, this is one thing a lot of people don't know. They can change two things. They can change the participation rate That's the knob and saying how much are they giving you of that upside and the cap rate. And so there's a challenge out by another one of our peers. Might as well just mention all of our peers today. Chris Kirkpatrick has a challenge out that no one's ever taken him up on it. It's for IULs. And he said, hey, if you can show me an IUL illustration from 10 years ago that has performed at the level or better than the illustration, we'll pay you 10 grand. And no one's been able to show them that. So for banking, because of the control factor, you want a policy that's unilateral. You want one with a mutually owned, dividend paying whole life company, which is going to be one of the future slides here. You don't want it tied to the market that's going to go up and down. You heard Gabe giving his real life example. I've had 100+ conversations with people who are a couple of years into it, and you start having that sunk cost bias where you're like, whoa, I one guy, I put in 18,000 this year, I put in 18,000 last year. He's in year like 3, and he has a total availability of like $6,000 if he surrendered the policy. Because there's a surrender charge. There's usually a surrender charge to year 5 or 7 or 10, depending how it's set up. So you have all these little things that you're not told up front. So this is just something that we're letting you know, like IULs can be good for some things, but they're not for banking. You know, like most things, there's a great guy, you guys should look him up. His name's Bobby Samuelson. He's totally agnostic. He has a group, I think he's in the Boston area, but he'll tell you a lot about how IUL illustrations. I'm not going to stay here because we could stay here for the whole time, but go look up
Chris
like
has a lot of good
Bobby.
videos on it too.
Yeah, there's a lot of videos. Chris Noggle, and so I'm gonna.
No one Nelson says it. Okay, so I just listened to Nelson and Brent and Chris and focus on what I need to focus on, right?
And if you focus on that book, everyone here who hasn't read this yet, this is the book that we must read as bankers. And we got to pay homage to Nelson. He's the gentleman who I think he spent probably 40 some years thinking and learning about the financial system before he wrote and put that down in writing, right? I mean, he started learning Austrian economics in the 50s. He didn't publish that book to 2000. The next mistake I see people making is, hey, I'm going to make this big purchase or I'm going to do this thing, but they steal the peas. They're not looking at their banking policy. They're not looking at their specially engineered whole life as a business that they're running. So they don't have a plan to pay back the policy. Now, you guys agree that the wealthy have more choices. Is that fair? But, you know, borrowing against the policy without having a clear repayment plan, thinking that it's free money. Remember, I showed you that it's growing guaranteed and you're borrowing from the insurance company, but you want to have a plan and you have flexibility. Like I just asked you if the wealthy have more choices. You want to either pay back the loan like Chris will tell you how to do it, right? Where you go out and you've invested the money and now it's coming back in, that payment that's coming back in of interest, you set it up in a structured way to pay back your policy loan. So every month at the same time, it's paying the same amount over a period of time. Like you set it up to pay it back however you want to do it. Or you can do it unstructured. Like say you have a windfall or you're expecting a big bonus and you've taken a loan, then you're going to pay it back when that bonus comes or when that windfall comes. Or you're just going to pay chunks at it as you're saving more. Maybe you're commission based in real estate or something like that. Or you can pay back the simple interest. Like an example I love to use is one of my mentors, Brian, had put $50,000 into whiskey barrels. And the whiskey barrels were going to appreciate over 2 years and grow to 150,000. So that 50 grand was going to turn into $150,000 over 2 years. But those 2 years, while that money that he took out of the policy loan, the cash value, you know, borrowed against to put it out to work, he just paid the simple interest on that 50,000 that he borrowed for 2 years. And then when that windfall comes back in, what's he going to do? He needs somewhere to warehouse his wealth. He's going to park it back in the policy. And that's going to be the catalyst to have him open that next policy, right? So if you guys are paying attention, everything we're talking about ties back to the simple principles that we're teaching you.
Yeah, he didn't just take that money and, you know, buy a boat or something. You know, it's something else if you buy a boat and you're renting it out or making money with the boat. But the simplest way I like to think about it is I'm not a private lender. I've done some private lending deals, but I know Brent does a lot of that. And the last I heard, he gets 16% on his money when he lends to some of these builders, and it's guaranteed. So if you have, say, 10,000, 100,000, whatever it is, and you go buy a toy with it, where you can take that same money, lend it to a real estate deal, a builder, where now you can make 16%. You got to think that doing that deal is so much better because you're going to replenish the original principal that you took out. Plus, you have more cash flow coming in from that interest, which you can end up putting back into more policies or a new policy or use that as premium and compound the system. Eventually, we can buy assets that pay for our toys. But if you're just getting started, you don't want to just take the money and waste it. Now, if you're using it on education, maybe buying some courses so you develop skills to make more money, that's where Jason said you can just pay the simple interest for a year or two until your business is up and running, and then you can pay it back once you have customers and clients. But it's
I
not
love
free
that.
money.
I love that. It's not free money. That's the easiest thing. Don't steal the peas. It's not free money. Have a plan. And Jerome just asked a great question. Are you borrowing against the face value, meaning the death benefit? That's how it's taught in Nelson Nash. You know, if you're a Nelson Nash practitioner, that's how it's taught in the course. That's how it's talked about among the mutually owned companies. I think there's a little distinction that we don't talk about enough. I do teach it this way, but we don't talk about it a lot, you know, in the videos and the webinars and things. You are collateralizing the cash value. Like the reason you can borrow money is you've built up a certain amount of cash value and you're collateralizing borrowing against that money. And then if something, God forbid, happens to you, then that loan is repaid from the death benefit. So you're not actually borrowing from the death benefit unless you die. And at that point, you don't really care because it's just coming out from the beneficiary's money that they're going to get for the tax-free estate. So there's a little distinction there. You're actually borrowing, collateralizing the capital that you're putting in, the cash value that you have in the policy. So thank you for asking that question. And next this is one I don't see as often, focusing on the wrong insurance company, but I want to bring it up, why it's important to have a mutually owned company. Why it's important to have a structure that, again, you're in control of that unilateral contract and you're the most important person. You're number one. And this is probably, Gabe, I was thinking this is one that we'll do a future training on, or I'll do a future training on, about why the companies we work with, what are the things that make them unique, why is it important that they're A+ rated or better.
Direct recognition versus non-direct recognition that can interfere with banking a little bit.
Yeah. And the big point in this one is stock companies, right? We
Yeah.
don't want to set up, one, we don't want to do the wrong kind of contract for banking, like an IUL where we're not in control. Two, we don't want to go with a stock company because, guys, who's in charge, guys and gals? Who's in charge, or who's the most important person in a stock company? Is it you or is it the stock owners?
Holders. Yeah.
It's going to be the shareholders, the stock owners, right? They're the ones that are going to get the dividend first. And so instead, we want to be the owner. We want to be first in line of that contract. We want to be even in front of the insurance company in that contract, and that's a mutually owned company. A+ rated or better means that out of 15 ratings that these companies can receive, they're in the top 2 ratings, the highest that they can have. We want to know that they've been profitable every year. We want to know that they support IBC practitioners. There's different levels of support. There's about 10 companies that support it. We work with 6 of them, and we've actually called some of the other ones just to see if we should diversify a little bit more. And frankly, we weren't that impressed. They're great companies. I'm sure they do great things. They could work for you, but we want to go with the ones that we're working with, and that's what we're teaching. We want to look at their financial stability being 100+ years. We want to make sure that when the dividends are paid, it's coming back to you. It's coming back to me, to Gabe, to the owners of those contracts. I always like to use the Green Bay Packers as the example. It is I think it's the only professional sports team that's owned by the fans. Yeah. That's what these, mutually owned companies are. It's from a mutual society. It's a long time ago that this idea came. Ben Franklin started this with fire insurance. So in the States, at least, in the United States, he started this back in the 1700s. And so when we talk about everything, we want to focus on companies that have been profitable for over the period of time that the IRS has been around, the central banking system, all of these new shenanigan models that the government's trying to offer you solutions for your financial problems that they've created through all the things that they've done. So we want to make sure it's the right kind of company, which is a mutually owned, dividend paying, whole life company. And then this one, oh, I already hit this one a little bit or a lot, but when we're comparing to traditional investments, I'll just go over because I like this graph. IBC isn't a replacement. It's not a replacement for your investments. You still have to find a way to put your money to work and have it go to work. So IBC, infinite banking concept, is the foundation. It's the foundation, the and asset to go do things. We talk about structure first at Victory Martial Arts. I think that's why I wanted to talk about this one. We talk about the bottom of the pyramid is structure, Gabe. That's our physical self. That is taking care of our body like it's a temple. That's how I want you all to think about your infinite banking policy. This is your temple. This is where your savings go. This is the foundation for everything else you want to build. Next is the emotion. We're here together, right? This is a community. We're here together. We high five each other. Go ahead, give yourself a high five. Your body won't know the difference. It still feels good. You can pat yourself on the back. It's emotion. You want to celebrate. My wife, who a lot of you have been engaged with, she literally will give a woohoo and like celebrate and do a little jig and dance, during the day. And I love it because it pumps energy into yourself. And then next is the knowledge. It's the going out there and learning the lessons, going and practicing and showing up like you're doing here consistently. And then finally is the legacy piece. And this offers a guaranteed legacy. If people tell you that you can't buy a legacy, get out of here. I went from having no legacy to having over $4 million for my family, if God forbid something happens, right? And so this is the structure, the foundation. So with that, I'm just going to say really quick, if you guys are new here, please subscribe to the channel. Make sure that you're smashing the like button, that you're ringing the little bell. Like Connor says, it might turn blue. It's going to alert you to our new content. You can go watch the other content and make sure that you're bringing people here. This is the way that we build the community and we support the millions of people that we will support. That is our goal here. Let's look at the next one.
Regina Brown asked, how can I get a policy? At the end, Jason will show you a QR code and a website. You can set up a call with Jason and he can go over how to do all that with you.
Thank you, Gabe. I didn't even see that. Thank you for reading that. And then for this next one, IBC is not a silver bullet. I'll let Gabe take this one for a second and I'll jump in, but it's not a silver bullet, right? It's not the magic thing that's going to fix everything. Gabe, talk about why we teach this from the martial arts perspective.
Kind of like what I was saying about the IULs, they almost pitch it as a silver bullet. It's got all the features and selling points that I guess people think they should be looking for. But what I love about Nelson Nash and some of the chapters in this book, like Parkinson's Law, Willie Sutton Law, the other one is the Golden Rule. They're very human concepts that if you don't have the discipline to overcome, it doesn't matter. You could have like a money tree day, week or year two, like Joe talks about. You can have the most efficient policy, but if you use it incorrectly, you could end up with a completely different experience, right? Here in jiu-jitsu, we can teach you different moves, different techniques, but if you don't have a good structure, like Jason's saying, if your body is not able to apply the techniques, or even if you have just a totally different mindset where you're just very selective. Oh, you pick and choose. I want to use this part of the system, but I don't like this part. I don't like having to do push-ups or having to do like these little animal crawls. I do a lot of animal crawling patterns. So we do a Komodo dragon, we do a lion, we do a gorilla. And when you start applying the jiu-jitsu, you end up kind of like shifting into these animals as you like maul the person, right? And it gives you so much athleticism. But in the beginning, it kind of like looks weird and people are uncomfortable because they're trying to use muscles they've never used in their life. They have no endurance and they just get worn out. So they revert to like grabbing, controlling, fighting. and it's just not jujitsu. So there's a lot of depth below this, and it has to start with controlling your spending, because if you spend way more than you earn, you're going to be in like a negative cycle. You're just going to be accruing debt and trying to pay it off, and you never get ahead. In jiu-jitsu, we want to get ahead and stay ahead. We want gravity to be on my side. I want to make it an unfair fight. I want it to be me and gravity against the other person. Because if it's the opposite, they're using the gravity, or I'm just like working too hard and it's inefficient. I don't know if you want to add to
Well,
that or keep going.
no, it's perfect. You're talking about the efficiency of your movement. You're talking about going, and right here we're talking about overcoming Parkinson's law, right? Which is just the law that our our expenses can't rise to meet our level of income. Like we have to have, we make this much money, we spend this much money, and the in between is what we're saving. We keep our needs below our means. You're saving at least that 10%, which is in every wealth book there is, The Richest Man in Babylon, which is Chris's favorite book. And Gabe just talked about you start having not only gravity on your side, you start having momentum on your side because you're using a system that becomes efficient, was the word he used. It becomes efficient. And over time, as long as you have the strategy, and remember, infinite banking, this is a lifestyle. It is not just a product. It's not a silver bullet. It's not even a habit. It is a way of life. It is committing to being healthy financially, committing to loving yourself and loving your family. So these are it takes practice. It takes patience. I don't know if anybody here has words. We're almost in 2025. One of the big things I've done the last 3 years is have 3 words for each year. You know, when I realized stress was a driver in 23, my words, and I write them down in my little like to-do list every day. Easy, effortless, abundant were 2023's words. This year I turned 50, so my words were adventure. You know, I jumped off bridges. I'm afraid of heights, like bungee jumped off mountains with a Spanish guy attached to my back that didn't speak any English. That was freaky. But adventure, impact, that means serving. And I had to add patience. And this is why I'm sharing this piece. My words for 2025 are already patience, empathy, and fun. So I'm offering, if you get any takeaways from this, add the words that you need for yourself, and that'll give you some leverage over it not being a silver bullet. And some of you, some of the people here, I've said, hey, have you read the book? And say, well, I'm listening to it. I said, well, go buy the book. It's much different when you read it, when you can touch it. It connects deeper to your neural pathways. You're single focus versus driving and listening, walking and listening, doing something else and listening. You want to really, like, you can take one sentence in Nelson's book, read it 5 different days, and have 5 different meanings to it. So it's always going to meet you where you're at, right? Then next, investment versus banking, right? The investment mindset, and this is the mindset piece. The investment mindset is we're focused on the short-term returns. We're focused over, even if it's, you know, something like the whiskey barrels where you're locking your money up for 2 years, you're still only waiting 2 years. You know, if you're talking about something where you're doing hard money lending, and like Brent's actually getting 18%. He won't do anything for less than 18%, Gabe, by the way. So it's not 16, it's 18. He actually charges his kids 14%. Did everyone hear that? Brent charges his kids, his 3 adult children, 14% for the condos they're buying, for the boats they're buying, for the planes they're buying. He charges them 14%. And why does he do that? Because he's thinking like a banker. He is thinking long term. That's the banking mindset. How can I turn this $1 into 2, into 3, into $4, and do it in a way where I have guarantees and I have the certainty that if this fails, I can go out and be in first lane. I say it all the time, like Ricky Bobby's dad said, if you ain't first, you're last. So you learn how to do something you know, like, and understand. That's long-term thinking. Again, it's structured over years. It's Nelson's favorite, my favorite quote by Nelson is, you know, plan as if you're going to live forever and live as if you're going to die today. He's just talking about being present. He's talking about having a plan for everything. And I don't know about you, Gabe, but I think more about someone who started who doesn't continue after 2 years, or someone who starts the application process but doesn't finish, gets all the way to the end, or someone who starts and they immediately think that something's wrong. And I understand and have empathy. That's why that word's there this year for me. But when we haven't evolved as a species, Dr. Benjamin Hardy says this, we haven't evolved to think long term. And so every time we do this exercise, we have to build that muscle as well. Like
Yeah,
you're
I have to break that mindset with a lot of the students because they just want to submit the other person. They just want to tap them out. But just any old tap isn't going to be great for you in the long term of your development. You're almost like training for tomorrow or for the match you're going to have a year from now, 10 years from now, and think long term. But with this banking, I wanted to ask you a question. Will a banker lend to someone who they don't think is going to pay back the money?
No, that's a great question. No, they will not. They will not lend the money to someone who has a high debt to income ratio. I mean, think about what the hoops the bank are making you jump through. When you call up for your policy and ask them for a loan, they ask you two questions. Gabe, you know what those two questions are?
How much you make and what's your DTI? Well, how much you make and how much do you have going out?
No, when you're taking a policy loan, they ask you,
Oh, a bank. Okay, yeah. Like, do you want a check or a direct deposit, and how
yes,
much
that's
you
it.
want?
Yeah. Do you want a check or do you want a direct deposit? Do you want a
Yeah.
check or do you want a direct deposit? Those are the two questions when you take a loan against your money. But then you have to be remember, we teach you how to fish. We don't fish for you. Even when you have an implementation specialist that's there to guide you, they're not telling you how you have to pay the loan back. So again, this business of banking is the most profitable business in the world. And all of you are here. It's amazing that you're giving this much attention to this, but all of you are here because you see that there's truth here. And you see that if you learn this and apply this, you will be, if you're not already, the financial disruptor of financial illiteracy in your family forever, you know? And that's one of our goals here. Here's one. Gabe, this is a big one. So neglecting policy reviews, neglecting to stop and to weigh in. It's like when you're training for jujitsu and say the person said, I know that already. I know these animal moves. I know these, submission moves. I know these arm bars. I know these different things. It was like today we were training and we hadn't gone over the blocks in a long time, right? Just
Mhm.
the different blocks and the different movements. And so as we're doing them, I'm like, wait, my wife's testing this weekend. So by the way, send her good energy. My wife, my youngest are testing for their second degree with victory. I'll be there holding boards and looking away so I don't take wood shards in the face when people are breaking them. But if you don't go on a regular and check in to see where you're at, how do you expect to make progress with your business? Like none of you, there's a lot of really smart people here, Gabe. Nobody here that owns a business is just like, hey, I'm just gonna put this money in and I hope it works out. No, check in, see where you're at. Ask, depending on the company, you can ask and say, hey, is there room to put additional PUAs in my policy without mecking it? Is there ability, like how much of my loan have I paid back? How much can I put back in this? You must, like Michael just said, you must know your numbers in your business. And this is just something, again, I'm bringing you guys the mistakes, the 10 most common, and I've thrown a couple bonus ones in here. Mistakes that I've seen, in the 4 years that I've been teaching and learning this from actual people that have either started or stopped because something got in their way. Now, I know life is going to bring you challenges, but know where you're at with your policies. Know that you have flexibility. Some people are like, oh, wait, my annual premium deposit is coming. I can't do that whole number. Well, you could actually go down to the base and make it monthly. Change it. Kind of know your numbers, know where you're at, know what the big plan is, and always keep that in mind. And then this one is huge for Gabe and I, right? And for many of you here, we want to think about it's not just a banking system. We're setting up a guaranteed legacy. We're here because we love our family. We're here because we love God. We're here because we love our community. And we want everyone to leave this place better than they found it. So, and I brought this one up, Gabe, because I get on the phone sometimes and I'll get someone say, hey, Jason, yeah, I don't care about the death benefit at all. I just want 90+% of my cash. I want it right away. Like, what do you guys hear when you hear that? I hear short-term thinking, right? No long-range thinking there. I hear looking at this as an investment, and I hear not really thinking about the big picture and other people. Nothing really wrong with it. Just you're at the top layer of the onion. You haven't peeled anything down to get to what's important. Anything to add on this one, Gabe?
Yeah, once you start thinking like Jason said, this is the foundation. It'll be the beginning piece. You're gonna start creating a whole ecosystem around it. So with my policy, I've used it to open up a jujitsu school. Now tomorrow is the official closing day. I'm buying a farm. Really excited about that. I'm using my policy to do the down payment, or my one of my policies to do a down payment. But hopefully by the time my son is 18, he'll not only have a black belt, he'll have a functioning jujitsu business. He can either take over, I could sell it to him, he can start his own. He'll have a flourishing banking business because I will have taught him how to start lending the money. He's going to be lending his money to my jiu-jitsu school, and I'll be paying him, interest on that. But we'll also have a working farm where we can produce our own food. And if I'm not there, the death benefit will be there to if something happens, to take over. But here's where we're gonna have to start creating systems and processes so that the knowledge is not lost, right? We have to pass it down so that they can apply it too. When you're the first one, you become the champion of your family when you break them away from the financial matrix or the financial industrial complex, the banks from the third party debt. You're drawing a line in the sand for your family tree. It's like we're not going back to the old ways. Now, like the
And
Rockefellers and those families, we keep that money within the family. We're going to continue to grow it. So it's just a whole different way of thinking.
and that's it. And I love that you brought in the education piece. Like, how are you? We talk about train, teaching, and testing. How are you able to go and teach this to your family? Not only leave, have the legacy plan in place, and because the worst inheritance someone could get, I just talked to someone today
Oh, yeah.
where, the his father's twin brother passed away,
Mm.
and he had done a reverse mortgage on the house. He had run up a bunch of debt, but any of the inheritance that was left is all in probate, and it's all going to be taxable, and it's all a mess. That's the worst kind of inheritance you could leave your family. So really understand the power of leaving a guaranteed tax-free legacy, that tax-free estate. That's going to be a multiple of whatever the cash value is. And Gabe, I didn't know if you want to answer, did you teach this jujitsu at the EXP con?
I don't know what the EXP con is. Is that like EXP, like the real estate company?
I wasn't sure either. I thought maybe you knew being the jujitsu master here.
Yeah, no, no, I've never been to an EXP conference. EXP was popping up when I was still a realtor. There was a lot of people from like Keller Williams jumping ship to EXP, but no, that wasn't me.
Okay, okay, nice. And then next one is, working with an inexperienced agent. If you guys are here, you already know that with the money multiplier, everyone that's part of this ecosystem, we came together. Like, I didn't know Brent and Chris and any or Gabe 2.5 years ago. No one from my community I knew 2.5 years ago, but I really believe when you have like-minded people that are committed to learning the truth and serving, you end up being in the same rooms of those people. So you want to find someone that really, if someone tells you, yeah, you're going to have cash value, but it's going to be after year 5 or 7, just walk away. They haven't taken the time to really learn this, or it's about them, not you. That's one of we talked about the 4 agreements, never make assumptions. It's never about you, right? And so in that situation, that person, that agent's making it about them. They're not a bad person. They just don't know what they don't know. Improperly designing this, that can really help you not reach your goals as soon as you could reach them. But also having someone that can tell you when you're trying to set this up, that's very short-term thinking. I understand why you want to do it, but waiting 6 months to pay that debt off versus trying to do it in the first 30 days. You've had this debt forever. You were paying this other bank forever. And now because you learned about this, I get it. You go through the stages of grief. You're mad, you want to take care of it. You don't want to have your money leave your family anymore. But there's a proper way to make that transition with your habit. So you need someone who's going to challenge that thinking and be able to show you, like, we're going to, yes, help you reach your goal, but I want to make sure that we're not setting you up for that short-term thinking. over time, as you get on the mat, as you keep showing up in these trainings, you have that ability to say, I own this now. And then you're going to do your thing. You'll no longer need, Gabe or Jason or anyone else to kind of guide you. You want to check in, but at some point, you're going to have a level of expertise when you're on that road to mastership. And that's down the road. I won't even call myself a master yet. I've been studying this, I'm learning it. I'm on my road. I'm an apprentice. I'm on my road to mastership. I don't expect to be a master at this for another few years, maybe several years more. When I have 20 plus policies, then I'll consider maybe I reached the point where I'm a master IBC practitioner, and then there's other levels to go. So you want to work with someone who lives, breathes this, is helping people set this up, not someone who does a one-off policy because it helps them make a little bit more money. That's probably as frank as I can say it. This one, remember my words? I added this one. This is probably more for myself. Bonus tip, lack of patience. We have to keep the frame. Number one, Gabe, is what in Nelson's rules?
Think long term.
What's number two?
Oh, I don't know.
Don't be afraid to capitalize. How about number three?
Yeah.
Don't steal the peas. Number four is don't use third-party lenders. And number five is rethink your thinking. If you guys keep everything, I just said it, on one hand, you have to remember five things. Think long term. Don't be afraid to capitalize. Don't steal the peas. Have a plan. Don't use third-party lenders when you can avoid it, because then you're giving interest to somebody else. Remember, you finance everything. And rethink your thinking. If you keep those five things in mind, it's only one hand. You guys don't even need your toes. One hand. One hand, and every single thing that you learn about IBC will fit into that. You can focus on the process. The process is getting on the mat and doing. You stay committed to the process no matter what anyone else tells you. You stay committed to the process, because do your own research. Everything Gabe and I tell you, everything else you learn here and other webinars, go look it up. Go challenge it. Go see if it fits your paradigm. And then you're patient with yourself over time. More than anything, patience with yourself. I didn't put that as part of the slide, but patience with yourself. We talked about this one.
Especially on the patience, Jason, because this, when you're thinking long term, and when we do the illustrations, usually it's on a yearly level, right? So it's, what are you gonna occupy your time with for that whole year before you make another premium? Like with some of these moves, you do like one or two moves a year. It's not, you're almost like planning all year to do your next move. So you have to find a productive way of using your time to either develop more skills, or you could just be working, save up more money, volunteering. Someone that wants to, like when I wanted to get into jiu-jitsu, I was a student for 3 years first, just a student. They let me start being a substitute teacher just because of my enthusiasm. And then I eventually got on the schedule as a blue belt, and I had one class a week where I taught a class. But then for another like 3 years, I taught for free. So I was basically a volunteer for 3 years, but I developed the experience so that eventually I could teach my own program, right? But you got to find something to fill your time with, and hopefully it'll be something where it'll quench your need to consume and spend, because that's, you want to eliminate those bad habits, and sometimes just finding one or two good habits or lifestyles to focus in on, that'll just keep you in a, almost like off the streets, like it'll just keep you focused. Like I played sports growing up. Our parents wanted us to stay out of the streets. I had some family members that maybe did different choices, but they wanted us in sports so we could go to college and just not make poor choices. Sometimes that can make a big difference.
Thank you, Gabe, for sharing that. I mean, you and everyone here, we're in overtime, so if you guys can stick around, awesome. If you can't, I get it. We're over an hour now. This one, we'll go a little faster here, touching on the last couple slides I have. This one, avoiding unrealistic expectations. This is the one where it's a little harder to put in words, I think, for me at least. But this is the one where people are coming in and, like people get angry when you see how much money the banks are making. You watch our presentation, you go to BauerFinancial.com, you learn that banks are making 400 to 1,300% on every dollar you deposit there, and then they can charge you up to 29.99% before it's considered usury, when you start understanding the rules of the game they're playing, it's very easy to get upset and think, I want control now. I have to catch myself a lot, Gabe. Like even with the four policies we have, even going from having over $100,000 in debt, building our wealth through our debts and expenses, keeping the wealth, paying for our ski vacation for the last couple of years through our policy, through Connor's policy, and now putting our little green men to work. Like that's a 4-year journey. That's not a long time to change my family's dynamic. But there's times where I get impatient where I'm like, ooh, like Gabe just said, I really want that thing. And I actually shared that with one of my coaches, one of my friends who considers himself the best wealth coach in the world. And I'm not going to argue with him with the amount that he has as much coming in passively as Brent does, and he's in his 30s. One day I won't say his name yet, but one day I believe he's going to be the president of the United States. These are the people that we want leading. But he when I wrote something to him the other day, because I want to get a new bike. I ride my tri bike all the time, and I want to get either I have the bike picked out, Gabe. I know what one I want, and they're several $1,000s, even used. They're several $1,000s. And so I wrote, I'm gonna help this many people, and I'm gonna go get this bike I want. I'll do it through my policy. I'll use my policy. And I was like, wait, I'm going to put the money to work from my policy out into an investment, have that come back, save that up, and then go buy the bike. That was a huge switch for me. And I just had it the other day. So I want everyone here just to avoid unrealistic expectations. When I talk to someone, you've been burnt, you've lost money, other things haven't worked, know that this is a marathon. Remember, number one is think long term. It's going to take time. Expect that growth to be steady over time. You're going to have to keep funding it. You're going to have to keep doing the things. And banking is boring. We're doing our best to make it exciting for you. But like Gabe said, you might make 1 or 2 moves a year, and that's it. Maybe you make more. Some people might not make a move for 4 years. I mean, why am I funding this again? Oh, yeah, the new car smell or the thing I was going to invest in, So this is
Paula asked, how long did it take you to teach this? I don't understand what the question, what she's referring to. I don't know if she wants to re-ask.
Yeah, if you have Paula, I can answer the question the best I can with that. Like I went off the deep end. I literally, when I read Nelson's book, I read it on a Tuesday, reread it on a Wednesday. Then I went and read a book by Don Bland, who teaches Circle of Wealth, called Personal Economic Model. Excellent book for this. He'll show you a lot of, actually it's sitting on Patty's desk. And then I went and read Garrett Gunderson, What Would the Rockefellers Do? I went and read every book I could find on infinite banking. I actually wrote a book. I might put it back out there, but I wrote like a 65-page book. Because to me, I don't know about you guys. Have you ever broke into a safe, Gabe? No.
No.
When you put your head up against a safe and you turn the thing and it makes that magic click. That's what it felt like. I've never robbed a safe either, but I imagine if I had, that moment when it clicks was the moment where I read Nelson's book. That's what it meant to me. When I heard Marty talking about it yesterday in the training we were in, this goes right into this one. The rethinking your thinking, which was the 5th principle, avoiding continuous education. If you've read the book once, Brent's read it 107 times. I read it 10 times. I don't know how many times Gabe's read it. Read it again. Yesterday, when we were talking about it, Brent said, oh, page 70 shows you how you recapture every dollar that you'll ever put into the system. I immediately opened up the book and looked at page 70. So there's a constant piece of education and thinking and challenging our existing thinking, because other things are going to seep in. You're going to be sitting at a table. Like I was out to dinner with a friend. He's like, oh, I just made $50,000 today in crypto. And I was like, sir, that's awesome. Did you sell it? Did you actually make $50,000, or did your crypto just go up $50,000 saying you letting it ride? Like, is it cash flow, or what did you do with it? So it's continuous education in IBC. It's really knowing that all the answers are in that book and in yourself. And when you make mistakes, own those things. Be willing to approach this as a lifestyle. Additional recommendations, find an expert. Be around this circle. You've got some of the best people here. Like Shane was here earlier. We got Joe. We've got a bunch. Felix. There's a bunch of people. And if I didn't name you, I'm sorry, Deborah. there's a lot of people here that are in this group that are already practicing banking, and maybe they just started, or maybe they've been doing it for a couple of years. Like Shane, when I met him, Gabe, he's one of my, I think it's one of the biggest wins where someone comes in, they still have debt, and now he's a big force in Private Money Club, where he started multiple policies in his family. He's replaced his active income with passive income. We have people like that around here, and that's possible. So go find your training partner, find somebody in the group that's practicing, find somebody that can be just a step ahead of you. I love working with the higher ranks, the fourth and fifth degrees, because everything they do is better than what I do at as a first degree. And guess what happened?
And that's what I try to do too, hanging around the campfire. Like you mentioned yesterday on the agent call we had with Marty, it was awesome. I get inspired by these people who are masters at this game, like Brent and Chris. I met Brent in 2014, and it was the first time I even heard about anything to do with life insurance. I didn't really know anything, and definitely didn't know about IBC. But I was 2014, I think I was 24, 25 around there. But I was not in a position to start doing this. I was too caught up on trying to get rich. And then eventually I got into like real estate investing. I paid like $50,000 for a real estate investing course with my dad. We tried to get into flipping and doing different things. It was like this, it was this program where you pay like $200 for, you went to the free course like one night, then it was a $200 weekend course. And then there they sold you on the $50,000, like, there's like 4 weekends and then mentorship. A mentor comes to your market. But something happened, something just about Brent always stuck with me. And I tried starting the process a couple different times. I even tried talking to some different experts and agents. And everything Jason said on this presentation, I didn't do it wrong. I mean, but I didn't even do it, right? But I guess maybe that's better, is not starting with a bad policy. Maybe I don't know if that's better than starting late. But long story short, 2019 I started, and right away I got licensed. I told Brent I wanted to be an agent and help spread the message, but I haven't been teaching super actively. So I've been using it and practicing it, but that's kind of been my story a little bit. Now I had the opportunity of opening the school, so that's been my full commitment as far as teaching. But now I'm trying to be not a secret agent anymore. I'm trying to come out and talk to more people and share a message so we can help free more people.
I love that. Thank you for sharing the journey. And Gabe again, he's saying that he's willing to go to train. He said that he had the desire. Like he had the desire. When you make a decision like this all the time, you make decisions like this. People spend more time, 99% of your time, suffering for something that's never going to happen. And that financial struggle is probably the number one cause of so many things in relationships, divorces, friction in families. What if we could end all of that? And we can. What if we could take back control? What if we could find the expert guidance, the system that you can apply for the rest of your life, have that long-term commitment, be continuous in your mastery and your up leveling. And that's what Gabe's saying. It's taken him a little bit to get there. But like when he said, "Hey, I want to teach a course on this. I think we could do some great things." I said, "Let's do it." We didn't have a plan. Like we literally said, "Let's go. Let's do this." And every week we're putting it together and we're getting better, a little bit longer winded at times. But now you guys have seen, like with all the five principles, all of the different mistakes that can be made, you guys are now a little bit more prepared than you were at the beginning of this. You have the ability to think long term, to capitalize your system, which means pay yourself first. I'm just asking you to love yourself first. I'm not saying love Jason, love Gabe first, right? We're not, when we're helping you set up these kind of policies for your family system, unless you want to, I'll give you my address, but you're never sending me any money. We get paid from the insurance company on the smaller part of whatever we design. And we're doing that to help you. And we know it works because 91% of the people who move forward will start additional policies. And so for everyone that's here today, I appreciate you, and I'm so grateful for you to be here and give me and Gabe your most valuable resource, which is your time, your attention, and your energy. and you guys are really interactive, so it's a lot of fun. Here's how someone was asking earlier how you can register for a call. I'll pop it in the chat as well. But if you're ready to start the banking journey, you've read Nelson's book, you've watched the presentation, or you need the presentation, I'll get it to you. But if you want to start that journey, book a call with me. We can have that conversation, because now is the time for a decision. You're either going to go keep learning and keep getting clear on your big picture. I think that's the most important takeaway I could give any of you. What is that big goal? What is the thing that you're looking for in retirement? What are the things that you're going to purchase? How can you leverage this to not only control the money, have it growing away from Uncle Sam in a tax-free environment in this hand, and have it taking care of your family in this hand, so you have that perfect sandwich with the cash value in the middle, right? A little bit of patience for a lifetime of profit coming back to your family, keeping the money in your family. And it takes time. So Gabe, anything else to add for this for you before we say bye to everyone?
No, I'm excited for the last 3 weeks. We're gonna continue to add value to you guys and get you off and running. If you already have a policy, hopefully you're getting ideas of what to do if you haven't started using it. But it's been a lot of fun.
That's awesome. We appreciate all of you, love all of you. So thanks for being here. I think we set some record numbers. Bring a friend, bring whoever you want next week. Keep introducing this to people, because remember, train, teach, test. And the teaching is you're practicing and you're telling someone else. And like Gabe just said, if you're new, you just start a policy, you don't know how to use the cash value yet, that's okay. You're building your system, so when the opportunity comes to buy something you were going to buy in cash, now you can buy it with your system, or better yet, invest in something that brings you back interest that you can pay for that thing for retirement.
You're positioning yourself.
You're positioning yourself. You're positioning yourself with long-term thinking. Even if your long-term thinking is only going to be 40 years. I was on a call yesterday with Gabe with the father. He calls himself the father of biohacking. He's 51. He says he's going to live to be 180.
Wow.
And I was thinking in my head, no way. But just that idea of thinking long-term, it made me challenge, like, well, maybe I could see myself being 110 versus like the 80 or 90 years I have my expectation. It all starts here. So all of you, with that last thought in mind, be blessed. Week 6 in the book, we talked about the 10 most common things that we see with the thinking when it comes to your infinite banking policy, the 10 biggest mistakes. We've covered them. We went over them. We've showed you what the 5 principles of infinite banking were. The thinking long term, not being afraid to capitalize, having a plan to pay your policy loans back, not taking loans from third parties. Remember, we finance everything we buy. We either pay interest, we earn interest, or we give up the opportunity to earn interest. And number 5, sounds like a Dr. Seuss book, but rethink your thinking, because the thinking that you're having today isn't serving you, so why not have some new thoughts to think differently in the future? Those are your 5 principles, the 10 most common mistakes we went over. If you're new here, go ahead and subscribe, spread the word, the channel, spread our mission, smash that like button, and ring the bell to get alerted to new content. I'll see all of you in the next video, where we're going to keep diving into infinite banking, giving you all of the education you need to free your family from financial slavery. Be blessed.